Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2024, and we're diving into the latest earnings report from Old Dominion Freight Line, one of North America's largest LTL motor carriers. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Old Dominion has just released their third quarter 2024 earnings, and there's a lot to unpack, from revenue trends to strategic initiatives. Let's get started.
Revenue and profitability overview. Okay, let's start with the top line. Old Dominion reported a total revenue of $1.47 billion for the third quarter, which is a 3% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decrease in revenue is primarily due to a 4.8% drop in LTL tons per day, although this was partially offset by a 1.5% increase in LTL revenue per hundredweight. Despite the revenue dip, Old Dominion maintained a strong operating ratio of 72.7%, although it did increase by 210 basis points from last year, reflecting higher operating costs.
And what about profitability?
Net income for the quarter was $308.6 million, down 9.1% year over year, with earnings per diluted share at 1.43, a 7.1% decrease. This decline is largely attributed to the challenging economic environment and increased operating expenses.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the company's future outlook. How is Old Dominion managing its operations?
Old Dominion has been focusing on improving yields to counteract cost inflation. They reported net cash from operations of $446.5 million for the quarter, which is quite robust. Capital expenditures were $242.8 million, with a full-year forecast of $750 million, indicating ongoing investments in capacity and technology.
And what about their capital return strategy?
The company has been actively returning capital to shareholders, with $824.8 million spent on share repurchases so far this year, including a $200 million accelerated share repurchase agreement. They've also paid $168 million in dividends, showcasing a strong commitment to shareholder returns.
Strategic initiatives and market position. Old Dominion has been known for its strategic initiatives. How are they positioning themselves in the market?
Old Dominion continues to focus on delivering superior service, which is evident from their 99% on-time service and a cargo claims ratio of just 0.1%. Their market share remains consistent, and they've improved their yield with a 4.6% increase in LTL revenue per hundredweight, excluding fuel surcharges.
What does this mean for their competitive position?
These metrics highlight Old Dominion's commitment to quality and efficiency, which helps them maintain a competitive edge in the LTL industry. Their strategic focus on service excellence and disciplined pricing is likely to support long-term growth and market share gains.
Risks and challenges. Every company faces risks and challenges. What are the key concerns for Old Dominion?
The primary challenge is the softness in the domestic economy, which has impacted revenue and earnings. Additionally, operating costs have increased, particularly in health and dental plans, contributing to a 210 basis point rise in the operating ratio. These factors could pressure margins if not managed effectively.
How is the company addressing these challenges?
Old Dominion is focusing on yield improvements and cost management to mitigate these pressures. Their strategic investments in technology and capacity are also aimed at enhancing operational efficiency and supporting long-term growth.
Key takeaways. In summary, Old Dominion Freight Line has faced some headwinds this quarter with a decrease in revenue and earnings. However, their strong operational cash flow and commitment to shareholder returns through share repurchases and dividends are positive signs. John, any final thoughts?
Old Dominion's focus on service excellence and strategic investments positions them well for future growth, despite current economic challenges. Investors should keep an eye on their ability to manage costs and maintain market share.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Old Dominion's performance in the comments below. Until next time.